Okay, just while we get started here, just want to take a quick look at the S&P 500. And down below, I have bow tie proper order. And bow tie proper order is just simply 10 simple, 20 simple, and 10 simple, 20 exponential, and 30 exponential moving averages. And when the 10's above the 20 and the 20's above the 30, you have green. When they're intersecting, you have yellow. And then when they are in downtrend proper order, 10 is less than 20 is less than 30. And this is a good little way to kind of gauge where you are in the markets. With moving averages, you're going to have some lag, so you have to keep that in mind. For now, longer term, this is a weekly chart now. It looks like we're doing pretty good in the P's, S&P 500. Now, unfortunately, when you get to a little bit shorter term, it doesn't look quite as good. So if we switch to a daily chart, you can see we've been mostly sideways for quite some time. You can go all the way back to November. And one thing I recommend you do is just draw a horizontal line going back in time and see where the market was and see where the market is. And if you kind of drill down into it a little bit, you could see the market's up, it's down, it's up, it's down, it's up, it's down. It's what I call a Jackie Mason market. I guess maybe that's too old of a reference for some of you. The other thing I like to look at too, now for the most part, I look at blank charts, but then I put the moving averages in afterwards. There's only a few indicators that I use. And let me just show you the Landry light, which is one of my favorite things to do, especially with the 30 EMA. And Landry light is simply lows are greater than the moving average, or the highs are less than the moving averages. And you can see that we've been chopping back and forth. And when it goes from green to red to green to red to green to red, like it's doing down here, that illustrates a choppy market. The reason I use the word illustrator is I don't think an indicator indicates anything. If you had an indicator that actually indicated something, you'd own the world. And I like to call them illustrators because they sort of help illustrate what's actually in the chart itself. So when you're seeing this choppy action, especially when it can't get past 10 days above or below the moving average, then this is of concern because the market is not getting anywhere. Now, Livermore has a lot of quotes and a lot of talk. He talks a lot about being patient. And the best thing that he said was just let him fight it out when the market is trading sideways and not getting anywhere. So now's the time to let him fight it out. I do a daily trading service, and I had one honorable mention today. But for the most part, I haven't had any setups in quite some time. So just be careful in this particular market. Let everybody else fight it out. And once you see a breakout, and if it holds, then you might want to think about getting long or getting short. Now, longer term, again, the market looks pretty good. This is a system I call the TFM 10% system. And the rules are very simple. If the market drops 10% or more away from the 50-week closing high and is below the 50-week moving average, then you exit. So right now, 54.91, keep an eye on that. The designer's intent, so to speak, was to avoid the so-called diaper change moments. And that comes from Ian McActivy, who's no longer with us, but he was an awesome guy. And you could see these bear markets way back here in 2000 and then 2010. You had sell signals on this. And in more recent times, during the pandemic, you had a sell signal, and then the market absolutely imploded right after that. So no guarantees, obviously, in this business, in spite of what these YouTube gurus claim. But so far, this simple little system would have avoided every bear market in history. Now, I do have a position here in the Qs, just real quick, and I talk about this in Dave Landry's The Weekend Charts, and you can find that on my YouTube channel, youtube.com/Dave Landry. But the buy signal is a little bit more stringent to help avoid whipsaw than the sell signals. And for the buy, you need two lows above the 50-week moving average. That's Landry light when the lows are above. And then you buy on the close, and this is done on a calendar basis. So you'd buy on that Friday, first Friday, it does that. And then you sell once again when it drops 10% or more away from the 50-week closing high and below the 50-week moving average. So right here, this would not have been a sell had it closed below this 10% zone. But if it closed also below the 50-week moving average, it would be a sell. So right now, the sell signal is at 476.71. Should we close somewhere around here tomorrow? And that's below, again, the 50 simple and the 10% line. So I am long this. And to my surprise, when I got in, I kind of got in just for S&Gs, 100 shares, who cares? But it's actually kind of begun to turn into real money, about 200 points, $200 of profit there, which is equates to $20,000, obviously, on 100 shares. So I'm kind of as shocked as everyone else, and it's been about a 65% run, so really good run to the upside there. The system was kind of more of a get out of the way system, as I said a second ago, as opposed to buy signals, but so far that's worked out pretty nice. I'm not seeing, should I be seeing the chat on his screen? Let's see. Oh, here it is. Okay. Now, one thing I want to look at real quick is let's take a look at Bitcoin, and let's go back to the Landry light on that one. Now, this is what I posted this morning on X. I talked about the fact that the Landry light is chopping back and forth between green and red, green and red. So as a general statement, if it's green, the market is good. And one of my favorite patterns is what I call a Landry light pullback. You're simply looking for Landry light to the upside and then pullbacks to the 30 EMA. And again, if it's green, it's usually a good thing. And then if it's green and red alternating, as we have been for a while, it's not a good thing. Obviously, the market is sideways. So Bitcoin is having a lot of trouble getting through this range. I think a lot of the early, not to confuse the issue with facts, which it's one of my favorite things, but I think that a lot of early adopters, people who have a lot of Bitcoin, are using this 100K range or thereabouts as a good place to unload. And I wouldn't get too excited about Bitcoin unless we get out of this range. Now, I think once we get out of this range, this thing could really go. And technical analysis 101 suggests that this huge range here will become a support level. So once we get past, let's say 110 and change, if we could stay there for a while, then I think the FOMO will begin to kick in. So Steven says cash. Is that stay in cash? I agree. For the most part, you want to sit in some cash for now. Ethereum has been a lot uglier than Bitcoin, and I want to show you something here with the altcoins. I'll watch my language on that. I think anybody who trades them knows what they're really called or should be called. But you can see Ethereum has been doing really poorly for quite some time. And notice that we're mostly red on the Landry light. And again, that's just the highs or less than the moving average. So I would avoid Ethereum altogether for now. And then on Bitcoin, definitely wait for that breakout to occur. Now, one more thing real quick. What you can do sometimes, now, these crypto cycles are really, really quick. My bread and butter is stock trading, and the real money's in these longer term trends. So I get in for a swing trade and I take partial profits should I hit the initial profit target, and then I bring my stop at the break even and then trail the stop higher. That's kind of the thumbnail sketch of how I trade. There's a little bit more to it than that, but that's pretty much the core methodology. I have all that printed on a cocktail napkin. As I often say, if you can't put your system on a cocktail napkin, then toss it out. But anyway, you can see with Bitcoin, it's gone mostly sideways for quite some time. Now, with these altcoins, what I like to do, and this is what I'm kind of getting to, long story endless, is the cycles are pretty quick here. So like it's almost like every 4 or 5 weeks or 6 weeks or so, you have a bull bear cycle. And in the bull cycle, sometimes you can just come in and buy the strongest ones. And I wouldn't say we're in a bear cycle. I'm sorry, a bull cycle just yet. Maybe that's a Freudian slip. And again, I tend to buy pullbacks with my core methodology, the Landry light pullbacks, like I mentioned earlier, and things like that. But sometimes you can come in here and just buy the ones that are making new highs, and they're also on a big expansion of range. And this one looks okay. Let's see if there's some other ones in here. But right now, I'm not really seeing anything. I think I'm completely out of the altcoins, at least for now. I'm kind of waiting for the market to improve. And I forget the symbol, but somebody was talking about, I think it's Bitcoin dominance or something. And that just shows you where Bitcoin is to the other pairs. I just like looking at the underlying, and you can see Bitcoin is not really doing so hot. We're well below that 30 EMA. And then, as I just showed you, sideways at best. So a lot of these altcoins are not going to go. It seems like as goes Bitcoin, so do the altcoins. A lot of the altcoins tend to follow. So that's your bellwether there for the most part. You can occasionally catch some really nice trends in some of these when the market is really running, even if Bitcoin is not there. But as a general statement, It's kind of like looking at the S&P 500. The S&P 500, as long as it's doing really well, and the NASDAQ, of course, then as a general statement, it's a good time to be in stocks. If not, like we are now, you need to be super, super, super selective. So let's shift over to stocks real quick. Okay. Cash. Is that the symbol, Stephen, or are you saying we should be in cash? Let me get the sharing back if I can find the window. Yeah, keep them coming. Okay, A-Lab I like, or had been liking as a potential short. Let's see if we're seeing the proper screen. Okay, let's see. Okay, are we seeing the Dave? Are we seeing the charts for stocks now, which would be telechart?
Uh,
Yeah. Okay.
ALAB is what I see right now.
Let's see. Yeah, it looks like it's working again. Okay, trying to get it out the way. Okay, so I don't know if cash is a symbol or is that saying stay in cash? Okay, so cash as a symbol is just kind of all over the place and sideways. So there's really nothing to get me too excited that. A-Lab has been a short recently. I actually recommended this one a few weeks back. And if you go and look at Dave Landry's The Week in Charts, again, youtube.com/Dave Landry, you could see I use it as an example of a stock that was recommended but didn't trigger. And I think it was this one. And it sort of rallied up. We had a pullback back here. It rallied up and then it rolled right back over. And it might have been on, I think it was on this day here. So let me clean this chart up and we'll take a look at that real quick. Let me show you what's happening. Okay, so on this day here, this was a pullback, okay? And it probably also was a Landry light pullback. So let's put that 30 EMA back in here. And the Landry light, yeah, so it pulled back a little bit further than the EMA in this particular case. But this stock was in such a strong trend, it's okay for it to pull back a little further than the moving average. And by the way, as a general statement, and this is a bit of an exception here because of the trend was so strong, but as a general statement, you want to avoid markets when they're below the 30 EMA. And you can see here, this market has dropped significantly since it was last above the 30 EMA. It's fallen, what's that, about 30 something percent. So anyway, this was a buy signal back here. Our entry was like right there and it almost triggered. And thank goodness it imploded afterwards and did not trigger. But anyway, this is now a short. I had the moving averages in. Let me put those back in real quick. And you can see that the bow tie moving averages have come together and begun to spread out. And that's one of a pattern I trade. It's a transitional pattern, okay? And we have one back here. You can see when a market bottoms out, in this case, all-time lows, which is my favorite for stocks with this pattern, and then it makes this bow tie. It sort of looks like an actual bow tie. You're looking to play the first pullback. So the entry would have been right here on that one. Nice little bow tie setup. And we had a pretty good run. Now, on the short side, you want significant highs, ideally all-time highs. Again, this is a transitional pattern. You're looking for the market to transition from one phase to another. So this suggests that this market has rolled over, the fact that the moving averages have come together. And then you look to play the first pullback. So the first pullback would have been right in here somewhere. So trigger would have been either on this day here, or if you played it a little bit higher up, maybe somewhere. So this would be a short for now. I would avoid this stock unless you were possibly looking to short it. And there's just not a whole lot to get excited about out there right now. That's okay. The best thing to do, as I alluded to earlier, would be just let everybody else fight it out. Okay, any more stocks? We'll get back to the charts for a second. If you take a look at Ethereum to Bitcoin, you could see that obviously Bitcoin has been doing much better. Oops, I need to, we'll come back to that in 1 second. Let me get this screen back. Okay, so Omar wants to talk about CNC. Okay, yeah. See, I'm a trend guy, okay, and my nickname, my Twitter handle or X handle is T following moron, and that stands for trend following moron. Years ago, a famous trader called me that. At least I think I knew who it was. And I was very offended and very hurt because we were friends up until that point. He did it anonymously, and I was very offended. But then I realized that when I try to outsmart the market, I lose money. And when I just follow along like a good little trend following moron, so to speak, I tend to do well. So this is not a stock you'd want to buy. Obviously, it remains in a pretty serious downtrend. I don't think it's a good idea to try to pick a bottom in a stock. There's a reason it's low. People are not wanting the stock for whatever reason, and that's why we use technical analysis to let the charts tell us what to do. So I would avoid that one for now. Let me just shift gears and jump back to crypto, unless there's any more stocks for the moment. But keep them coming, and I'll be happy to get to them. We have plenty of time today. So let's do this. Let's go back to crypto for a second. In fact, let's take a look at, as I was saying earlier, Ethereum to Bitcoin, and then the 30 EMA again is going to be your best friend here. So if you take a look at Ethereum to Bitcoin, $ETH, BTC, if I can make it come up. What am I doing wrong? $ETH, USD, $TC. Well, we'll just go back to the spot market here. Anyway, the Landry light, meaning the highs are less than the moving average. You can see we've had Landry light for a long time with the Ethereum versus Bitcoin. So this is definitely a market you want to avoid. So again, this 30 EMA can be your best friend. Just avoid markets as a general statement when they're below that 30 EMA. And look, it's been below the 30 EMA since 0.036, and now it's way down here, about 25% lower. And it's really impressive when you take a look at some of these altcoins, and I just sort them by alphabetical, and you really want to, again, avoid it, any market as a general statement that's trading below that 30 EMA. Let's see if we have a chat come up while we're waiting on this thing to come back. Yeah, keep the stock picks coming if you have any other ones. So again, avoid, as a general statement, markets when they're trading below the 30 EMA. So here's a market that was up at about what, 44 cents, okay? And now it's almost halved from that. In fact, if you look trough to low, and I'm just picking up these things randomly. I have them sorted by alphabetically, I should say. But you see another case, look at all the trading below that 30 EMA. Look at the trading above the 30 EMA, okay? Nothing magical about anything. Based on these lines in here, it looks like I bought this breakout here. I'm not a huge breakout trader, but as I said earlier, in crypto, especially with these altcoins, you can sometimes just buy the breakouts. And keep in mind, you could do the same thing in stocks, but only if you're in a rip-roaring bull market like 1999 and sans a crazy bull market where everything's just going straight up. I wouldn't recommend trading breakouts. Now, some people trade breakouts, and I get that. But keep in mind, with breakouts, you're going to have a really high failure rate. But when these altcoins are really running, especially if Bitcoin's doing well too, like I said earlier, you can just buy the breakouts. Okay. So T. Joseph wants to know about SHW. Probably not going to like that one. As a general statement, I think that's going to be what, Sherwin-Williams? It's probably going to be lower in volatility. Okay. Now, here's historical volatility. I have plotted right here, and you can see that it's about 21, and that's on the 50 days. Let's take a look at the cash S&P. So we take a look at cash S&P, and it's 15. So it's pretty low, like the market itself. It's pretty low right now. So as a general statement, I tend to like stocks that are about 30 or above. And then obviously you could have too much of a good thing. If it's really crazy volatile, then you want to avoid the market. But you can see that That's the Dow Jones. Let's see if we can get the SP 500. All right, there it is. Okay, SP 500 is 13, which is a little lower than I thought it would be, but it's probably because we're just chopping sideways in here. But as a general statement, again, you want a little bit higher in volatility stocks. Now, as a trend trader, you can see this stock does not look good. It sold off fairly hard. It's retraced back up to the 50 simple. And you can see the moving average is rolling back over. Now, I wouldn't go long or short this particular market, but if I had to take some action, I would say it looks like it could be still in trouble. If you take a look at some of these sectors in here, and yeah, keep the picks coming, please. Let's take a look at the P's. Okay, again, you can see mostly sideways as of late. It's up, it's down, it's up, it's down, it's up, it's down, it's up, it's down, it's up, it's down. And then this makes a buy and hold person look great when the market goes from here to here. But notice that you've had this big spill, and then you had this huge spill here, and then this big sell off, and this big sell off. And yeah, if you're not using stops and you wrote all that out, you're looking like a genius. But longer term, it's not going to work if you're not using proper money management. Now, as I was saying, a lot of these sectors have been really choppy as of late. Semiconductors dropped below this range in here, and then they've been trying to push back through it. So I would avoid the semis for now. You can see they're sideways at best. And a lot of areas, even the stronger areas, are sort of bumping up against the prior peaks in here. I like to see a breakout and not look back. Some areas that were trying to bottom out, this is biotech. They were trying to bottom out and rally. It's come all the way back in. So that's a bit of a bummer. So the more you look, I should say, the more you're going to see on how mixed this market has been as of late. Gold, the commodity, has been doing pretty good. That would be one exception. And the gold stocks are following suit. So we might see some setups in gold fairly soon. So that's kind of interesting. But again, a lot of areas have either stalled short of the prior highs, kind of like banks. And then here's another banking index. This one actually made it past the prior peak, but not by much. And this concerns me if we start coming back in. For trend, what time frame do you use a 30 EMA on? Day trade, swing trade? Okay, patterns are fractal, okay? So I used to preach a lot against day trade, but I do put on some day trades here and there. Although I've been trying to avoid it a lot lately based on this crazy electrocardiogram looking market. But you could use whatever your favorite time frame is. And so if we take a look at, so let's take a look at like an hourly, and then let's just put a moving average back in. Good question. Good question. Thanks for that. Okay, so let's make this nice and bold. And then we'll take a look at that. Okay, so there's your 30 EMA, and then we'll just pull up a random market, the Qs, QQQ, okay? So you can see there's no trend here sideways, all right? We've got a few bars of upside Landry light, but you have downside Landry light too, okay? Up and down, up and down, up and down. Now, if you were to look at like it still looks really ugly on the hourly chart, or pick your favorite time frame. But you can see that sometimes some trends do develop on the hourly, and you can see that we stayed above the hourly for a long time here, okay? And we've also had a lot of choppy action around the hourly. So whatever your favorite time frame is, if you like something like Landry Light or the bow tie proper orders, or just eyeballing charts like I do, just change your time frame. And again, the patterns are fractal with that. Getting back to the market in general, Sky Computing has been doing really well as of late for the most part, but it's another one of those cases where it really hasn't exceeded that prior little peak in here. So I really like to see this market break out and not look back. The market's kind of in a waiting phase, I guess Bitcoin too, for that matter. And by the way, one thing that's kind of a bummer with Bitcoin was I was hoping that it would trade independently or more independently of stocks, but it seems like there's a really high correlation. Okay, TMX SPK. What is SPK? Spock? Tim. Oh, one of those AI guys. Yeah, these AI guys are a lot of fun, but they're all over the place and crazy, crazy dangerous. I played a reversal this morning in BBAI. I played a reversal, an opening gap reversal, a little bit more advanced strategy, but that's where you're looking for something in a strong trend, you're watching the gaps in the morning and to see if there's something that gaps lower that's in a really strong trend that's poised to snap back. Pelosi made big money on options on this. Ah, okay. Yeah, you could make a lot of money following her. So I'm told, and then you do the inverse of the guy who screams on TV. I'm not going to say his name. I'm not going to be Schadenfreude, but he is abysmal. Yeah, that's at a pretty nice little trend for now. I like to see it get past these prior peaks. Now, in stocks in general, unless we're in a rip roaring bear market again, I'm not going to buy the new highs. Okay. But in a case like this, you definitely want to let it make some new highs and then look to trade to pull back. So it would have to get above 80 and then pull back for me to get excited from there. So we probably have time for at least one more if there's something else you guys want to look at. And, just getting back to the overall market, broker dealer, you could see another one of these areas that just kind of barely got past this peak and then came back in. Okay, any more? Well, while we're in impasse, obviously, I want to thank all you guys and girls for attending today. I appreciate you taking time out of your busy schedule. Anything unanswered, any questions you may have, Landry.com. I do answer my own emails eventually. I have, if you want, all three of my books in PDF format and limited access to the members area, DaveLandry.com/members area, the members. You can go to DaveLandry.com/free-book, and you'll get all three of those books for free. Again, I want to thank everybody for attending. And David, thank you so much. I really enjoy doing these. So thanks for having me. Are you welcome, Barb?
Yeah, thanks, Dave.
Appreciate it.
Great analysis. So thank you for being here.
Yeah, thank you.